What's up, millennials? Today I'm going to give you the exact fair price per share for a company called Bakkt, which is a digital wallet company that's going to be acquired by the SPAC that's currently trading under the ticker symbol VIH. Now, before we start, if at any moment you don't really know what I'm talking about, please check out my full SPAC guide, which I released a few weeks ago or even a few months ago. It's going to be somewhere in the description, and today we're going to be taking a look at method number 1. Also, if you need access to the Excel sheet I'm going to be using today, you can join our Discord for free. You can just go to nisami.com/discord. Then you can join our Discord by leaving your name, leaving your email address, and then you're going to get access to it. And of course, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm certainly not a financial advisor. Don't copy my numbers as is, but always use your own numbers, your own multiples to come up with your own fair price per share. So to give you a very brief introduction of Bakkt, Bakkt is a company that tries to provide you with a universal digital wallet. They're mostly focused on crypto, so they want you to use crypto to pay for stuff, but you can also use the platform Bakkt to send crypto or cash to other people. And they also have a platform where you can trade crypto. Now, with regards to the merger date, we don't have any date just yet, but it's likely going to merge somewhere in Q2 of this year. Okay, then what about their pro forma valuation of this company? Well, let's take a look at the investor presentation for this. First of all, we can see that they started out trading at $10 per share, which is of course very usual for SPACs. So that's the number you can put over here in your Excel sheet. Then we can also see that they are going to have about 267 million shares outstanding, of course. Now, to be exact, that is going to be 266.6 million shares outstanding. So that's the number that I've put over here in my Excel sheet. And that is going to give you already that pro forma market cap or pro forma equity value, as they call it here in the investor presentation, of almost $2.7 billion. Because if you simply multiply that number, $10 per share, by the amount of outstanding shares, then you're going to arrive at that number. Then we can also see that they are going to have, apart from that equity value, they're going to have $574 million in cash on their balance sheet. So that's the number you can plug in over here. And then you can already decide what the pro forma enterprise value is going to be. So basically, how much the company Bakkt is worth. And you can do so by taking that pro forma market cap we just have been calculating, $2.666 billion. Then you can subtract the amount of net cash, $574 million. And then you're going to arrive at this enterprise value of almost $2.1 billion, which is also the number that's right over here in the investor presentation. The thing is, however, if we go into TradingView, we can see that currently they are not trading at that $10 per share anymore. They are a little bit higher right now. Pre-market, they are trading at $14.95. They seem to have a nice little bump today, so that's pretty good. So yeah, $14.95 is the number you can plug in over here in your Excel sheet. And then the Excel sheet is already going to calculate the current pro forma market cap and the current pro forma enterprise value. Because of course, if the price is going to go up, then the pro forma equity value and the enterprise value are going to go up too. First of all, we can see that the pro forma market cap has gone up to $4 billion, and we can see that the enterprise value, the pro forma enterprise value, has gone up to $3.4 billion. But that is, of course, the current pro forma enterprise value, but we want to know what a fair price per share is going to be, so we also for that need to know what a fair enterprise value is and what a fair market cap is. Let's start with that fair enterprise value. And for that calculation, we need two numbers. First of all, we're going to take a look at the revenue, the expected revenue, of course, of 2025, so 4 years ahead in time. And we are going to apply a certain range of multiples to that revenue of 2025 to arrive at a fair enterprise value. Very well. So let's first take a look at that revenue of 2025. And of course, that is going to be an expected number. We don't know for sure if that's going to happen, but Bakkt expects to have a certain amount of revenue in 2025. Let's take a look at the investor presentation. So here on page 28, we can see the following. We can see that in 2021, they already expect to have quite some revenue. For example, the total revenue is $889 million. That sounds like a lot, but keep in mind that there are very many transaction-based expenses of $834 million. So you need to take that total revenue, take off the amount of transaction-based expenses, and then you're going to arrive at their net revenue, well, not entirely the net revenue, but the revenue minus those transaction-based expenses. And that is going to be for 2021, 55 million. So let's take a look at how that is going to evolve over time. In 2024, they expect a very high increase in their total revenue from 889 to more than $3 billion, which is an insane increase of 241%. I'm not entirely sure what the reasoning is behind that increase, because if we take a look at the subsequent years, we can see that the increase is not that high compared to 241%. So the question is, why do they expect such a hard increase in 2020 or 2022 actually? That's a question. But we are going to be taking a look at the number 2025, the year 2025. And we can see that in 2025, they expect to have a total revenue of $6.6 billion. But if you take off the transaction-based expenses, which is going to be almost $6.1 billion, very high number, of course, you're going to be left with a revenue of $515 million. That is the number we are going to be using for our calculation. So that is also the number you can plug in over here in your Excel sheet next to EBITDA, revenue, and in this case, of course, it's revenue. So $515 million. That is what they expect to have in 2025. And of course, expect is a very big word. We don't know for sure if this is going to happen. Very well. So we now have our first number, $515 million. We're now going to apply a certain range of multiples to that number to arrive at a fair enterprise value. For that, we're going to take a look at the multiples of other companies out there. Okay, so if we take a look at the EV to revenue multiples, EV to sales multiples, and again, if you don't really know what I'm saying here, maybe check out the full spec guide that I released a few months ago. It's going to be somewhere in the description. And again, this is method number 1. So yeah, check that spec guide out if you don't know what I'm talking about. Again, the EV to sales ratios of multiple companies out there are in the investor presentation over here. So for PayPal, we can see that if you look at the EV to sales ratio of 2021 instead of 2025, you can see that the EV to sales ratio of PayPal is 10.9x. For Square, that's 27.3x. For Afterpay, 26.6x. And for Shopify, 35.4x. Of course, these are companies that are, in general, high growth companies, right? So that is definitely something we need to take into account as well. But if we take a look at the median number of these multiples, we arrive at a median multiple of 27x. So that could maybe be a number we could be working with. The thing is, though, that I believe that these companies, PayPal, Square, Afterpay, and Shopify, still have a lot of growth coming for them in the next coming years. But if we go back to that revenue expectation of Bakkt, we can see that the growth is going to slow down a little bit over time. First of all, it's a lot, of course, in 2020 or 2022, actually. But it's going to slow over time. In 2025, they only expect to have a revenue increase of 15%. So that is maybe something we need to take into account. Because for these companies, if you look at these growth numbers for these companies, you can still see that the revenue growth of PayPal still is 18.5x, or sorry, 18.5%, Square 29%, Afterpay 58%, Shopify 36%. So these revenue growth numbers are still relatively on the high end. So in my personal opinion, maybe 27x is already a little bit on the high end for Bakkt in 2025, because we are going to apply these multiples to the revenue numbers of Bakkt in 2025. Hope you're still with me. Okay, so what we are going to do, or what I chose to do, and this is a little bit subjective, this is where your opinion might differ from my opinion, is I've come up with a range of multiples from 20x on the low end and 25x on the high end. So a little bit lower than that median multiple of those 4 companies, 4 competitors we have just been taking a look at. Again, if you think this range of multiples 20 to 25x is on the low end, maybe change that in your own calculation to see what kind of multiples or what kind of valuations you come up with. Anyways, I am going to work with that range of multiples from 20x on the low end, 25x on the high end. And if you have all of these numbers, the calculation or the Excel sheet is going to do some calculations for you already. First, we're going to take a look at the valuation of the year 2025. And I actually put in 2024 and a half because, yeah, that's the number we're going to be using later on, but I'll explain that later on. So what the Excel sheet is going to do is the following. First of all, it's going to take that revenue of 2025 of $515 million. And it's going to multiply that, first of all, by that revenue multiple of 20x on the low end, to arrive at an enterprise value on the low end of $10.3 billion. And then it's also going to take that revenue of 2025 and is going to apply that high multiple of 25x to arrive at a high enterprise value in 2025, of course, of $12.9 billion. Then you can also say, okay, we're also going to use a midpoint valuation, which is basically just the average between the low and the high enterprise value, which in this case is going to be $11.6 billion. That, of course, is in 2025. We want to know what the fair price per share is right now in 2021, after the merger occurs. So for that, we are going to use a certain formula for which we are going to need two numbers here as well. First of all, we need to know an amount of years to discount it back from the future back to the present. And secondly, we also need a discount rate. Well, for a discount rate, I chose 20%, which is a very common discount rate for SPACs. Okay, so 20% is a discount rate we are going to be using. And again, if you don't know what I'm talking about with the discount rate, maybe check out the SPAC guide. And for that second number, we need the amount of years to discount it back from the future to the present, from 2025 to the second half of 2021. That is, of course, 3.5 years. And because at some point in my Excel sheet, I've got the number 2021, I here use the number 2024 and a half. So if you have 2024 and a half minus 2021, then you're also going to arrive at that 3.5 years amount of time. Hope that makes sense. So those are the two numbers you can plug in over in your Excel sheet, of course. And if you do so, then you're going to be able to discount it back from the future to the present. I'm going to first do the calculation manually for you as well, so you can see what the Excel sheet is going to do. So what it's going to do is the following. It's going to first of all take that low enterprise value we just calculated of $10.3 billion. It's going to divide that by, first of all, 1.2. The 2 here is standing for that discount rate of 20%, which we have just been taking a look at. And then you're going to multiply that to 3.5 years, or to the power of 3.5 years. Because of those 3.5 years, we need to discount it from 2025 back to the second half of 2021. So if you do that, you arrive at this number, which is $5.44 billion more or less. And if you go up to the Excel sheet, you're going to see that the exact same number is being used over there. So it's going to do exactly the same thing for the high valuation, which, as we calculated, was $12.875 billion. We're also going to divide that by 1.2 because of that discount rate of 20%. To the power of 3.5 because of those 3.5 years back in time from 2025 to the second half of 2021. And then you're going to arrive at $6.8 billion for a discounted enterprise value right now in 2021, which is also the number that's in my Excel sheet. Very well. So then you can also calculate the midpoint valuation again. That's going to be the average between the low and the high valuation. And that in this case is going to be $6.1 billion. Now that is the enterprise value. We want to know what a fair price per share is going to be. And to do that, we first need to go back to a fair market cap. So to do that, we need to take into account that the difference between the enterprise value on the one hand and the market cap on the other hand is the amount of net cash they are going to have on their balance sheet. In the beginning of this video, we said that they are going to have $574 million in cash on their balance sheet. So if you take those enterprise valuations and you add back the amount of net cash, you're going to arrive at these fair market caps for 2021. So for the low end, it will be 6 billion right over here. For the high end, 7.4 billion. For the midpoint valuation, 6.7 billion. And then the only thing you need to do is to take those market caps, divide them by the amount of outstanding shares, which we said in the beginning of this video was 266.6 million shares outstanding after the merger, of course. And then you're going to arrive at these fair prices per share. So for the low end, you would arrive at a fair price per share of $22.56. For the midpoint valuation, $25.11. And for the high valuation, $27.67. So according to these calculations, it looks like Bakkt is actually undervalued. Of course, don't trust me, verify me, always check what I'm doing, always check if the calculations are actually correct. And also keep in mind, we have been taking a look at assumptions. We've taken a look at the predicted revenue number of 2025. We've applied a certain range of multiples, and maybe you believe that range of multiples should be lower, maybe it should be higher. So that is for you to decide. The thing is, however, if you change one of those numbers, the entire calculation is going to change and your fair price per share is going to change as well. Now, I'd love to hear your opinion as well. Do you think that Bakkt is a good company to invest in right now, or are you staying away from it? With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!